Howdy traders and good afternoon. Welcome to another fantastic day. Big night in the US overnight. It really just all happened after about 6 a.m. Our time. So we'll have a bit of a quick chat about that. The topic for the day. I know there's been a few people have asked in the past, and a few people just sort of have touched on how we sort of plan and prepare a market. So I thought we've done bits and pieces before, but I mean, it's always good to reiterate these sorts of things and how we plan for it personally, and what we look for. It's not so much the entries as such, but it's just trying to, gain an idea of the bias of the market. Always good. So we'll have a bit of a talk about that today. It's called, we've named it prepping a market and planning a trade, what you have to know. So it's really just to get yourself on the right side of the market or getting the bias in your, and then however you enter, it's up to you. I guess we all know the way I like to, what sort of setups I like to look for to get me into a trade, and that's sort of the last step. But we'll go through a bit of that today. We'll have a bit of a chat about what the market did overnight. I'm guessing everyone has caught up with the news so far, knows that the US has raised rates. I think they only raised a quarter of a point, 0.25 percentage points. And that takes them to a whopping half to 0.75 of a point somewhere. I think it's somewhere in that range there anyway. But I think in September they were talking about potentially 2 rate rises in 2017. Now they've lifted that a bit to 3 rate rises. So it's sort of what we discussed yesterday on the market. And again, like Paul was saying, now if something doesn't happen, with all, what is it, the Trump policies don't take effect, or they get changed or something like that, and there's no inflation, not as an inflationary environment, I think that will tick back down to 2 rate rises, potentially 1, and then it'll be interesting to see how that market goes. Even if there is, a fair few rate rises, that's going to crimp, like we were discussing yesterday about the increased debt ratios, I think, of the companies. Now, what would happen? Yeah, it was all of a sudden there is good inflation, and they have to 3 rate rises. That's going to hurt them, isn't it? I mean, and then the key factor that's driving this market on, they basically need company valuations to catch up with where the S&Ps projected them, I guess. And if they don't, you'd expect the S&P to catch up with company valuations and head south a bit. So we'll just see how that plays out. It'd be interesting anyway. I think we're in for a good year next year. I think we all should be getting ready, preparing what we think is going to happen, and planning ahead. And we'll discuss that. We'll touch on that today. We did a fair bit yesterday, I guess, on the markets and what could happen. You never say it's going to happen. Would never say that. It's just planning ahead. All right. So if this happens, what are we going to do? Now, if it doesn't happen, what are we going to do? Plan both sides of the market and just what you expect to see. Now, always be happy to admit you're wrong and reassess. All right. A bit of a yarn there. So what you're seeing on the screen is the typical, the trade setup. We've got our live stream page there, and like I said, if anyone's new and is watching this for the first time, feel free to join us on Twitter, Facebook, or subscribe to the YouTube channel. And that way, as soon as we go live or we start streaming, you'll get a pop-up on the YouTube as well. That would automatically pop up, I think. I've got one today. It's just an alert saying trade setup's gone live. Now, of course, we have our general advice warning, so don't take what I say as gospel, but believe me, I can talk a bit of rubbish, so just be careful. Anyway, that's what we're trying to say. You've got the general advice warning, so we don't take into account anyone's positions, what they've got. It's just our opinions only on what we're looking at. All right, so take your time. You can go back and just read through that. What else we got to say? Not much. And how are we all anyway? Before I keep going too far, I saw Michael. You love the pictures. I don't know if you put that through yesterday or or today. Anyway, I do love them too. Or if I can find something that gives me a giggle, I like to put it up there. All right, let's get into it then. Market down 42. It was touched down 50 points just a second ago. I think I was looking at it. Down 50 points on the XJO. A little bit weaker than what I thought may pan out. Like we said, most of the action was, they had the rate announcement at 6, and I think, was it Yellen? Yellen started chatting about it at 6:30 and was just talking about the market. And that's where it really kicked off, because that's what everyone was really waiting for. We knew that there was going to be a rate rise as well. No, nothing's guaranteed, but it's pretty, it was high up there in percentage terms, and we expected that. And what it was is just what they planned for next year. But then again, similar type of scenario. I think they were talking about 2 to 3 potentially for 2016. We got one at the end of the year. So if it's a bit down the same track, then I'm guessing the S&P and the Dow and that have got ahead of themselves a bit. So if we don't get that inflation and the company valuations don't kick on like don't get don't go up or don't get as better or don't increase as we expect, then you'll see some action. But where was I heading? So yeah, it's not quite as weak as what we thought. Well, sorry, I didn't think it'd be this week. We've talked about this ASX yesterday. Let's just take a look at that. This is the actual index, not a CFD. This is a straight index, so you can't trade it obviously, but this is what everything's derived from. All your derivatives, your CFDs, your futures, is all off this. And we can see that it's touched up, like we said yesterday, right up at 50,600. I think it's shy about a couple of points. What did it hit yesterday? High of about 4 to 5 points. It missed that target by, which is pretty much hitting it in my book. We touched up on those highs. You can see previously it touched through 56, rejected, built that lower high, which you can see that strong rejection too. Those two strong candles we're on a daily. Tried to creep higher, sort of broke out there. You thought you were looking for some continuation at that stage, but it really just couldn't go on with it. And that type of price action is not too conducive, especially after a couple of good days. That strong leg up, a couple of good solid down days, and this type of not choppy, but a bit up, a bit down, a bit up, a bit down, holding some minor high lows, and then that minor breakout didn't go on with it. And obviously it just capitulated from there. We fell over to 5,200, built that major lower high. But really, the leg up that was in play was down at 50.50. And this is the leg that we're talking about on the daily basis. That was a big, strong leg up. So all this really is just contraction of that leg up until we break that anchor. So we'll touch on that again today as well. Just talking about anchors and why they're important and why you should technically, why you put so much emphasis on them for direction or for bias of the market. And we do anyway. This is what you're looking for. If you actually, we'll draw it up just quickly. Don't mind me if I tend to get sidetracked a bit. So has anyone taken it with their, obviously, firstly, who's heavily into technicals and who's sort of takes, I personally, I do a bit of both. I'm not as heavily into the fundamentals as what I probably could be because I find that I like technicals. I understand them. And it's more for me, I'm always a big fan of psychology behind the move. And I think technicals show that pretty clearly. And you can see when, just the way you interpret, I think I really enjoy it. I think it's something, if you're serious about trading and you really want to get into it, you've got to have some sort of technical basis to any of your trades. Yeah, no, I agree, Paul. You've got to, and in saying that too, you've got to have technical, but you've got to have a fundamental basis as well. At least know what the stock's doing. You don't want to jump into something that has a really crappy outlook and you just bought it on a little bit of a break and then you get hammered. Especially if you're thinking if you're a buy and hold type of guy, you don't want to do that. So you always want to increase the probability of your trade, I guess. Yeah, no, I agree, Nathan. I know where you're coming from too. I think you're an old boy from the day. I think with Devon, aren't you? Yeah, so let's just look at it in context of what we're seeing here. We've had that move down on the daily. We've got a leg up, leg down, leg up. So that's, at the moment, this is our anchor at the moment. We pull back, and as soon as we break these highs, this becomes our anchor here. Got that leg up. So that leg up was never broken right up until, actually, say oops, just draw that a bit better. That's the current leg up. Okay, so your anchor has to be down at 50.50 if you see those lows. All this really, in context to that leg up, is just contraction. Yeah, nothing's broken. So in context of this major move higher or trend higher, that anchor's still in play. Yeah, and we've had that move up higher. This is where it comes a bit, yeah. What else was there? Was another one. I was going to chat about, was it Bellamy's? We've traded that in the past, and then it's just been hammered. I only just really read about the news on it. I think it was this morning. I mean, like I said, I didn't. Once I've traded it, I sort of forget what it's doing, and they've been having their outlook's not very good. It's like they've been hiding something, um, or what is it? Something to do with China. Their baby products, and they've been sort of trying to hide the damage that that's happening there. Crash, yeah, yeah. All right, so where are we just here? So this overall trend, this move higher, this is where we come into a bit of a crux, and we'll talk about it more. What we talk about, we call it retest fails. Um, a retest fail is such where it hits a level and it starts backing off. And we'll go into that a bit more, or people call it a double top. We put a fair bit of emphasis into that, and that's something you really got to take a look at. I think anyway, just as part of your trading tools. I mean, there could be a few key things you watch for, and that if it doesn't appear in the chart, you can move on. I mean, if it's fundamentally really good and you really want to buy it, then you'll find something, I guess, or you'll find a basis. But generally, there's a few key factors we look for when we look in the technicals. And that's why I feel you can trade directly off them. Sometimes you might get hammered, but that's why we use hard stops, just in case. There's another one we used a while ago. Can't remember that either. We got out about 2 days before. It might have been Bellamy's. 2 days before, it just got hammered a bit, and then it's got even. The reject shot was one. I think we spoke about that in the past. We got stopped out because of a hard stop, but if we were holding that, we would have got hammered on that about 3 days later than what we got out. So I think it got really knocked on the head for whatever reason. They failed to meet in reporting that. I think the projections failed to meet projections, something like that, and people didn't take it too well. Actually, got to be a little bit angry. So from here, well, we don't know what's going to happen. Obviously, we're expecting a bit of a correction, but this is something. This is a sort of a key thing in play at the moment of what we look at time and time again. But really, your anchors are quite important. We'll discuss. I'm getting sidetracked, I know. Market's backed off today a bit, and it's really just at the crux of what we said yesterday. Let's just take a look at the Aussie as well while we're here. So this is on a 30-minute chart anyway. You can see that starting to rock out. It's got that support line at 55.40 under attack now, and that's looking to me like it may not break today, but I've got a feeling this lower high, if we just move that at was it 55.60 zone? Just delete that. I got a feeling that's going to hold, and you're going to see some pressure coming into the market. A few lower highs, and then that press down into say 55 and even lower. So we just have to see where it goes, but I think it's going to bring a few sellers into the market. Let's just quickly look at the Aussie. Got belted, obviously, with that rally in there. And funny enough, you would have thought it was definitely pretty much a shoo-in if they're going to raise rates. I don't know if that was when they raised rates or later on. 7:30. Yeah, that pretty much come after once they started talking about was it that candle? So I'm just trying to find the actual time, rough time. That might have been more towards they raised rates and they started talking about it, and then bang, talking about the interest rate rise. And they're talking not just next year, three next year, maybe three in 18 and three in 19. They're sort of planning ahead, three each year after now, because they're seeing that inflation is going to be on target to really lift those rates up to about 3% or something like that. But anyway, Aussie dollar doesn't look good. I think it's broken a few key levels, but this major support zone, potentially support zone at 73.70, could hold. We have to see how it pans out. Don't want to go much further than the 30-minute chart, but you want to see these lows hold. You want to see above this level, maybe some higher lows build, but there's a lot of work to do because of that steep move down. I think it's washed out a lot of long positions. Probably got a fair few shorts jumping in there as well that need to get washed out on the other side, and you need to see that start to hold with some higher lows, even some contraction around here before we start seeing push back up to highs. But at the moment, technically, we've had that contraction higher that's broken. To the downside, we could push back up, build that lower high on a major base of 74.50 thereabouts, somewhere out, and then bang. Just have to keep an eye on that longer term on the Aussie. Quick look at the S&P. But blackballs, yeah. Thanks, Paul. Just keep popping them out. Always good to have a look at. We'll have a look at those in a minute anyway. You can see that move up on the S&P. Bit of contraction here down to say 21.79. We've had that good leg up. If we can just push that out a bit. So that's the contraction point. So the major, more of a major level is down here. It's more of your major anchor on a weekly basis or a daily basis. probably a daily basis actually. It's contracted down, and that's projected this leg up, which is only really just potentially broken now at 22.50. So you can see how we're talking about the anchors. You get that contraction lower, and it produces a little minor leg up, and then your contraction lower until that breaks. That trend is high. There's a good heads up that that's breaking at the moment. You can see that rising support line. We just put that in as a bit of a guide to see, okay, well, if that's broken, generally you'd see it bounce off it like that, pull back to your MAs and then bounce off it. So this, what we could get is, this is starting to break apart. You might get some buying back up. We might see that lower high build on the longer term and then a bit of a rollover, or it could just go from here straight down again. Another big night tonight, but see how that plays out. Anyway, let's get into topic for the day. Okay, prepping a market. And we probably have gone over this quite a bit. I think it's important just to keep recapping it. I don't know if anyone, how they do it, how you go about your trades, whether you just jump in and whether it's off fundamentals and you like looking at the daily and then you just jump in off the daily. Obviously my background comes from more futures and trading into foreign exchange and trade a lot of stocks, but it's more that. So you're sort of trying to prep that one market or a couple of markets and then just trade off that and just sit there and watch it, really watch for your setups, watch to trade off different levels. You do a lot more with stocks purely because you're flicking through one chart after another. So I guess you start to whittle down what you look for as well, and try not to make it too complicated, in my opinion. But yeah, that's where I come from. So it was a bit of you're just trying to get in the habit, building your habit of prepping a market. So you know what you want to trade, and you know what levels you want to trade, and you know what you're seeing. If the bias is down, you want to sell. Okay, that's a given. Then you just try to go off different charts. But there's a few key things we look at, obviously. We'll go through a couple of charts. We've discussed probably one in particular, SEK, S-E-K. SEK we've discussed with a few people in the past, because I know they were looking at them. I know Anne Marie, I think, in the past was looking at that, and we've had a bit of a chat outside the stream just about that as well. And I think it's still in play, and we'll go through why and how we prepped it up and how we built that picture. All right, and we'll go through. There's another one, MVP, we've discussed well in the past, which we could actually prep up. We can just do a basic one on that from technical point of view, because the fundamentals, this is one where we do like the fundamentals, and the fundamentals are great, and they're going to kick in sooner or later. It's really just waiting for one major announcement on that one. Then we've got to know how we're going to attack it, whether just straight out buy, which is going to be hard, I reckon anyway. But technically at the moment, you wouldn't really want to jump in and buy, purely because it hasn't quite set up. But it's getting to a point where it's going to get exhausted, this little move down, but we'll talk about that as well. So what I want to go through, some of the key important things that we used, to plan a market. My first, just get this. We can probably actually. What I want to do, I'll get up Ninja. Ninja's always good to draw on. Just give me a second there, guys. Does anyone go and prep their markets? Obviously, you've got to. I know that's probably a silly question, but how do you prep it? Do you start off on a weekly and move your way down, or do you go? The way I'd do it, basically, say going back to the futures there, when you're prepping it every day. So I'd like to prep it every day, just getting that flow in case there's something you missed the day before. You've got a clear mind. You re-prep it. You look at it and go, oh, that stands out, and then you just re-prep it. And it changes your bias to the overall market. But what I would like to do, when the way I approached it, and I do, was jump into the market. Yes, just start, have a quick look at the daily, see if there's any key level hanging around on the daily chart. What's the bias of the daily chart? Is it up, down, or sideways? What's looking like it's happening? Is it contracting? Is it going up or contracting? And just get a view for that. And that's just really getting a feel for the daily, because I would trade off a 5-minute or 1-minute chart. Get a feel for that, then pop it down to an hourly or a half an hour chart. So this is where I would start to, okay, the bias, what's the bias of the 30-minute chart? Is it heading south when the daily is heading up? And try to get that. So, okay, maybe we're contraction on the daily chart and just get that contracted. Then you're trying to look for contraction to expansion in any sort of market. And that contraction to expansion is really just trying to take advantage of a leg high, and then try to follow that up as best we can. And that's where your lower time frames, when it comes back to management of a trade. So once you've got your, I'll go from the half an hour charts, get out some sort of key levels that would probably come into play for the day. And then my anchor chart would have been a 5 minute chart, you know, looking for zones to trade off or areas to trade off, and obviously taking into account the context of the overall market. Does that make sense? And then if I was trading it, if you actually jump in a trade, you've got your nice spot off a 5 minute chart. I'll probably give you some examples. Uh, let's just put this up quickly. This was just a pre-prep that I did. This is on the SPY 200. I don't know how long ago that was, but it was a while ago. 17th to the 11th. Actually, it wasn't too long ago. But just a basic prep. So I would just try to get an idea, a feel for the market. This was, I don't know what chart this is now. It's probably only a 5 minute chart. We're just trying to pick, okay, you've got a key level up here. You've got this touchdown here a couple of times. It's working its way off. Maybe it's breaking that move down. And then what am I looking for? I'm looking for maybe a contraction back to that anchor, and then it could roll over, or it just rolls over from here. Or I might be just looking for, a potential buy where it pushes back up to, that, and then if it backs off from there and it starts looking like it's contraction and builds another higher low, then it may look to push up through. But I've got an idea in my head of what I want to see. So I would do that every day. And then just management, when it comes down to management, I'd like to just whip it down to a 1 minute chart. So if you happen to get, just as an example, just see if we've got another example here. Just trying to find one. Anyway, say here you got in the short here, and then how do you manage that trade? You want to manage it on a. I essentially like to go down to a lower time frame chart. So I just like, because I'm trying to take advantage of. We know there's probably a good key level up here. Say hard right edge. Say we traded in this zone, the market was here, and then before we saw this movement down. All right, so we know there's a key zone up here. What would happen? That's maybe that's a double top. If it backs off from there, what do we want to do? Maybe we want to jump in and sell it. We've got our setup, and then we actually sell. We've got a good little trade going. So at this stage, we're trying to manage it. I would get into a 1 minute chart. I just try to reduce the risk as much as possible off a lower time frame chart, because what we're trying to take advantage of is the potential for move from 53, 55 down to a potential support zone, which we've predetermined as well. And you're just trying to look for that leg. The market's pushed up, it's probably contracted high, and we're looking for that expansion from one. This, to me, just glancing at this is really just a longer term, channel between market just be bouncing between support and resistance, but there's still a trade involved. There's still a trade in it, and I'm really just looking for a push off that resistance. And you want obviously your setups to confirm it. Once you jump in, managing it off a smaller time frame, because you're really just trying to break down each anchor on that 1 minute chart. You're not, because it may not show up on a 5 or a half an hour chart. Half an hour chart might just be a couple of candles down and you're done. Does that make sense, guys? So that's how I use the smaller time frame, because you want to see when it runs out of steam. And if we're looking at this, maybe you've got initially, I can't draw it up properly, initial resistance here. It's touched up, and then once it breaks down to the downside, maybe it gets down, this move down here, you might lower your risk. And you might get to a break-even trade here if you've sold through that little spike below. All right, you're still expecting to continue. Market's pushed down, it may contract back up, and you've got maybe a level here. You can move your risk down here. You're starting to lock in some profit. As it moves lower, you're just trying to find those little, swing levels, whatever you want to call it, and then it's just capitulated, and you've gone smash straight through support there until maybe you've really tightened it up. You've got a great trade, great risk reward. It's panned out beautifully. And then off the 1 minute chart, you go, well, if it breaks back up here, I'm expecting longer term contraction and to pop up. Or if it does nothing, I'd rather be out and reassess. All right. So once it's broken up, it's pushed through here, it's chopped around here, broken back up, potentially just above this blue line. I might have got stopped out, for instance. So that's on the lower time frame. On a 5 minute time frame, you could still be in that trade if that was chopping around here, and you might get caught up in some chops. So that's why I like to, even to manage a trade, just jump down to those lower time frame charts. Sorry. All right, let's get for babble on that. Let's just look at some key points that just try to draw them up here. Let me get rid of this. This is actually seek. All right. No, what am I trying to do there, guys? Is there any questions? Makes sense similar to how I trade. Yeah, I know you. I thought you traded off Renko bars too. I like Renko. Just could never get him through my data. Let's just get all this rubbish off. So just so we've spoken before about anchors and the trend. Just quickly to recap, what we're talking about anchors is you may have heard before, swing levels. We just want to find where that market is. If we've got a support and resistance, this could be on a weekly time frame, a daily. It's not our anchor chart, but we know that the market might be moving between support and resistance. Get rid of that. We might have seen, this type of price, a bit of a washout, and then it starts building. Okay, it starts to build. And as soon as you get that breakthrough through here, it's starting to build and it's starting to hold some higher lows. The market's pushing up from support up to resistance. Okay, so it's starting to get a bit extended up here. And we've defined this just by prepping the market. We can draw it up and we go, okay. And let's say we're at this stage here. All right, so we're trying to prep the market and we're just trying to see what's happening. So we know, okay, this is a major, we've drawn this in. This is what the current market's doing. We don't worry about what's happening on the left-hand side of the market. So we're trying to trade. This is a leg up. Now, is this leg going to fail? And how do we want to trade it? This might be a key resistance zone. So you're just trying to potentially mark up all the areas. If I can do this, let's just change this to a different color. All right, so we're just trying to mark up all the levels of where we see, some action. So if this leg is going to continue, this is the current anchor for this leg up. So we know that this spot here, or this pullback, has reduced this leg up into a major resistance zone. So we know we've got an anchor here to contend with. Markets may be contracting. We've got a major resistance zone up here. So we're contending against that. So the potential of the 30-minute chart, which this might be the 30-minute chart's up, we might find this is the 5-minute chart. The 5-minute chart's pointing down. So we're just trying to make sense of it all. And we've got to prepare what would happen. So from this basis, I may have prepped my market of what I've done off the half an hour chart. So now I've just got to analyze what do I expect to happen. All right, so I can see this is contracting because we've got a leg up here. This is the anchor, it hasn't been broken. So I would classify this market as it's heading down on the 5-minute, but the bias is up. Problem is we've got a resistance zone. So what's going to happen? We've got to just draw up some scenarios. If we can, let's just skip that. It's not what I wanted. F2. So I'm just going to change the colors here. So I'm trying to, let's pick it. Can everyone see? I'm guessing green's all right. So what we want to do, we want to see if the market starts heading up, what do I want to see? I want to see that high low build. All right. And that potentially could take me a new leg up and away we go. And then we've got to pick it. Obviously you're trying to search for another level up there where we might be heading to. So you want to know what am I looking for? What's potentially my setup? This is what I like to look for. Failure of that move down. Okay, it is contraction. That's been justified by the higher low building, and then really it's just a matter of getting to your entry setup, and that's what I like to see. We've got these high lows holding. Market's tried to push back up. It's tried to continue lower. It's built a higher low, and we know that this is potentially contraction. What do I expect from there? I expect at least an attack on that resistance zone, maybe a push through. What's the other scenario? Maybe we do push up and we just retest that level and then we build that lower high. And then in that case, what we're starting to see is that double top and that resistance is becoming quite important. So I'm prepping that market. This is where I might try to look for a short. Does that make sense? So I've got these couple of things I'm planning ahead, different scenarios. And that way, on this scenario, you expect the double top becomes quite important. All right, or a retest fail, we call it. So it's tested it once. Once it tests, the more times it tests it, the more important the level becomes. Does that make sense there, guys? So what we'll do, the key things for what I look for, if I can type this out, I'll just put it up here. And Nathan will probably pretty much say along the same lines. RTFs, or what are they called? Double tops. I put emphasis on that. Always looking for anchors, which way, anchors, which is the swing level, what's anchoring the current leg up, and what's our potential for a leg. Just say current leg. What else have I got? I put a lot of stock into obviously MAs. That's just really to define your to define which way your trend's going, what's happening. Is it starting to contract? We're going for from contraction to expansion. You see the MAs start spreading apart, heading higher. We want to be on the buy side, but we want to jump into a little bit of maybe a pullback, and away we go. Yeah, okay, that's a good example. We'll jump in. MAs, we use a 20 and 50. That's any preference, pick what you want. That's what seems to suit me, what I tend to like, and I start seeing, I think once they start crossing, we're looking to go to expansion, depending on what the actual price structure is doing. Shoulders, we have spoken about previously. Shoulders we'll show you in a second. And really that's sort of it. That's what we look for. That's sort of some key areas I look for. So if we've got a market, we know, is this going to be a retest fail? It's touched up here. Is that going to produce this type of scenario? Then it's not. Forget about it. That's not a retest fail. Don't just sit on the offer here because it hasn't confirmed anything. What we know is we're going from contraction. We could be heading to expansion, and that could be continuing this overall leg higher. All right. But if we get that little, what we call a shoulder is here, is when you maybe get a retest fail. This is a shoulder too. So you could potentially short it here, but you've got to remember the context of the market. We've only coming off a resistance zone. We've touched it once. We could be contracting. We could just head straight down. We could be popping back up. You don't know at that stage, but as soon as you get a shoulder in this scenario, off a double top, whatever you want to call it, that's showing weakness or strengthening sellers. Buyers are starting to weaken, and remember where we've come from a support zone to an offer zone, say, to a seller's a support zone to a resistance zone without really any correction. We're getting the double top, we're getting that shoulder. Good little sell demand. It's a good reason to jump in and sell potentially for whether it's just going to contract or it's going to roll over and correct this overall leg. And remember, 1/3 to 2/3 contracting down there could easily be a nice little trade involved, depending on your time frame that you're looking at. All right, does that make sense? So this is how we like to prep a market. Now, before I get too carried away, we will just go through Seek. But this is sort of the key things. Has it coming off a double top or an RTF? Where's our anchors? What are our MAs doing? In this case, I'd say the MAs are up. When you've got this type of scenario, higher highs, higher lows, MAs up, starting to roll over potentially here, or they're contracting in. And if we get this scenario, they might start to spread apart again. We're going into expansion. We're looking for a new leg higher because the strength is in the buying. But you might get a quick sharp move up, and then that lower high or that shoulder, you might see the MA starting to roll over, and then we go, okay, let's jump in on the short side. All right. So if we go through, see how much data I got here, or more than that, don't I? All right. So this is one we've done a lot of work on. So if we can go all the way back here, we'll just stick to a daily. Won't worry about the weekly. But if we prep up this market, so we go through the process, what is happening? Pretty clear. What we've seen here is a double top. Right, in this zone. It's washed out, it's popped up, and it's just failed from there. So that's, as soon as you get through, potentially you've got that. And what we should see this contraction lower. If this is a strong market and this continues, it should have come off a higher low in here. Right, so this is sort of a key area. If we were going to go long, what we should have seen, and always think of what you expect to see. If we were going to buy this, what we'd expect to see is that continue with strength, and it hasn't. It's just broken through. All right. So as soon as we get that sort of that breakdown of that leg, we're heading south here. Okay, that's a confirmed double top. You get a breakdown. We've had a contraction. Right? That contraction should lead to expansion. We've had popped up, but it's just failed. As soon as we hit that top again, it's washed it out and it's failed from there. So okay, we've got a double top on here, which is a double top or a retest fail, whichever way, it's a double bottom or double top, should put pressure on the market. It should bring in some more sellers. That's what your expectations are. And that's led to a bit of a sell-off. It's popped up, and we've just seen capitulation through there. All right, so on a weekly context, this is maybe a try here, and we get that major correction here. All right, and then we start working our way back up again. Work our way back up. We pressed up into potentially that's the anchor for this move down. That's a key level. It's touched up again there. It's backed off from here, but it's built a major high low. So this is building the whole story, if you make sense. And we popped up through that anchor level. So that leg is down and starting to fail. Is this going to be a continuation of this major weekly trend high or even a monthly trend high? We don't know. And what we're seeing now is that pressing up, and then we've got failure again. If we can draw that up. So you've had that pressing down. You've taken out pretty much a key level here. So remember, is this making sense, guys? We're always trying to look for an anchor level. What's okay? This leg's moved up, then it's contracted low. Where's our key level? We're probably looking for a key level here. All right. So from here, at this stage, we should expect it to push up, which it started to do. It's come back. It's pulled back, which is a natural movement in the market. So from here, we should have expected it to move up. It hasn't. It's attacking this anchor level here. This is going to be a key level. It breaks. All right. Once you get a break of that, what's happening there? Well, I don't really want to be buying it just yet. I want to see more confirmation. And then you've got a major double top and it's headed lower. So you're always trying to define an anchor level. Where's going to be some action and reaction at a different level? And these are your key levels, your swing levels. It's sometimes it's fairly clear, sometimes it's not. It can be a bit hard to derive, but in essence, you can see that fairly clearly. That's got that move down. It's built a major high low in context of that. So this leg down is starting to fail. A higher low, like we said, leads to a deeper correction, whether it's a deeper correction up of a move down or it's a deeper correction down of a move up. All right. So this, say for instance, this one, this is a pullback. That's a lower high in context to up here, and then that's going to be a deeper correction, which it did. All right. So we're in context of this leg down. We've had that pullback. We'll pull back to here. That's a high low. It starts breaking, falling apart. We should see some selling coming. We're not. We're seeing buyers come in, and that's failure of this leg. So we want to see a deeper correction of this leg down. All right, which we got. And what we got up here, market's made another double top, and you can see that starting to roll over and fail. So in essence, we've got a double top here and more pressure coming in on a longer term basis, not just a daily, but a weekly. So there's pressure pushing down on a weekly basis. And you can see that with, breakdown here. And you can see it sort of plays out on a bigger scale. The same things are playing out. You're getting this sort of break here. That's led to a double top. It's failed. It's failed here. Some key levels pushing down. We popped back up here. We retested this high and we're starting to fail. We've got a key zone here and we're looking for potentially this is to be another major lower high and we're going to work our way south again. So this is what we've planned, and then we're really just picking out a trade from here. So we've done the planning. We've got our key levels, what we expect to happen. I'm biased short on this one as a seller because of this major double top, a major lower high potentially in play. That major high is not confirmed just yet, but it potentially could be as soon as we get a breakdown. If we can draw that through here and we'll just do a different salmon, like salmon. All right, so if we get a break here, we're sort of front running this major level break, and we're probably front running this key level at 1369 breaking. So we're looking that lower high is going to hold, potentially that lower high is going to hold. We're going to lead to some major weekly rollover. And if you can take a look at the bigger picture, we've had a push up, a pullback, we've had a push up, so we can't get back up to this high and through on a very long-term basis. No worries, Paul. Cheers, mate. Thank you very much for joining too. So on a major level, we expect this to continue off this major high low. It hasn't. You made a lower high and a major base. So what does a lower high lead to, like it has here? A big sell-off. So potentially this one on a weekly basis could lead to a big sell-off. We attack this low at 1150 through here, and even potentially a major correction. So that could be the start of a good move south. We don't know, but we've got very limited risk. If we just potentially take a break of this low, 1424, risk could be just up here or above this little minor high at 1523 or 1492, get a big sell-off, and that could lead to a potentially big leg. If we're wrong, we're not risking a lot. So we prepped up that market. We've got our levels. We've got our bias overall. This is getting complicated, obviously, but we can see our key levels which are broken. Does that make sense, guys? All right. So I guess the key is you just got to try to pick out your anchors, this is where we prep it. Look at what the major trend is doing. Okay, what's happening in the minor trend with respect to the major trend? Might start off at a weekly. Okay, their weekly trend's definitely up. MAs are heading higher. Market's making higher highs, higher lows. Okay, on the daily basis, it's pulling back. Okay, in context of the weekly, it's probably just a bit of a correction, and the daily could just be heading south. So what are we looking for there? We're looking for it to ease. We're looking for it to run out of steam. We're looking for it to build a higher low on a weekly basis. And on the daily, you want to see failure. You want to see these little higher lows, little minor higher lows build, and that could lead to another weekly leg high, which is going on a major basis, so, from contraction to expansion. All right. So we're trying to break it down on a chart. Always keep it in context to other charts. You've got your anchor charts we spoke about before. And then your trading charts. What do you trade off? Might be a weekly anchor. Might trade off a daily and look for entries off a daily. Or you could use your daily chart. Trade off a 30-minute, an hourly chart as an entry off your anchor chart. Could be a daily, and then you're really using your weekly just for a major view of what's happening overall. All right, let's kick off. Let's just go over to. Trying to think of one other thing. MVP. I won't do it on the Ninja. MVP is something fundamentally we like. They've got what is it? Penthrox. Penthrox is the drug they're producing, and it's been given the go ahead in a lot of places now, a lot of countries. I think in the UK, I can't quite remember. Actually, let's just kick over here then. Penthrox approved for sale in Taiwan, so it's got that. It's been approved for sale, I think, European countries. There you go, approval for 22 European countries. I think the major one they're looking for, it just signed up a deal. So fundamentally, everything's fantastic on this. Signs a major deal with CSIRO. You can read all this news, go to their website. But getting the picture that fundamentally we like this picture. And so what the key thing is for us is really this FDA approval in the US. I'm guessing that US market is going to be massive for them. And if they get FDA approval soon, you'll just see this probably take off, and it will be hard probably to get an entry. You'll see it maybe gap up and off she goes. But what we're seeing, if we're trying to plan a trade into this on a weekly basis, well, let's go back to this one. That looks great. If you were looking for an entry around here, off this little high low, this level at dollars holding, you built that high low, that good solid candle, pull back, made a high low, maybe you enter through here, which you see that's led to a move higher. It's different to this type of price action. It's different to entering in here because nothing's really happening there. You've got a major lower high, putting pressure. $1 marks holding, and then we turn around and come out the other side. Once you see more of buyers taking control, it's coming off sort of from that oversold. It's struggling to get in. You take out the new lows or take out a dollar, and it's gone. What we're seeing is this stock is pulling back. It's contracting. So the weekly MAs they're close to crossing over. There's nothing to say this can't get build a major high low on a weekly basis, but fundamentally there's all the reasons why it's going to pop. You probably just find that the news flow has been such that it's drifted higher, had a good push higher, profit taken's pushing it down again. Maybe we're heading down to 4 to retest. We don't know. That could easily turn around and just go bang if some news comes out next day or before the end of the year or early next year. Drawing this up, planning ahead, we're trying to do, just trying to get a view of what's happening and what we could expect. Oh, it does that. It doesn't like me. What we're seeing, obviously that trend is clear down. The bias is down. We've got the anchors really, probably a little anchor here, another little anchor to this move down. We're starting to find maybe some support down here, but it hasn't really taken any key level. I'd say if it gets up through 475, just remember it could be contracting this leg down, so it could easily, sometimes people can get sucked in quite easily. Buy on a break, knowing the story, look for it, and then it can roll over again and head straight back down to $4 and retest $4, even break, and because there's been no news flow just yet. So just taking into account your entry, you can see longer term it is contracting lower. We might find something around 4, even a bit higher. So it's coming to that zone. If we just go back to that weekly, you can see there, this leg down, this contraction lower is getting a bit extended, getting a bit stretched. So we're getting to that zone where it's looking good. So planning ahead, I know what I want to see. If it can pop up here and contract a bit low and build a major, say that's this little zone here, it's pushed down, popped up, it's pretty much retested, and we're sort of at this stage at the moment. If we can kick up, maybe come back and build another major high low, I think at that stage you'll probably get a good little entry through. So I know what I want to see. I'm biased up because of the fundamentals of the stock. Um, it's looking good. Maybe on a daily basis, still got a bit of work to do. I know what I'm looking for. I mean, I might get caught out eventually if the news comes out and bang, this thing's gone. But you probably find if it does pop up straight away, there's going to be a bit of correction, a bit of profit taken, and might give me the opportunity then. So either way, it's a good outlook for this stock. I've planned ahead. I know my key levels of what I want to see. If it gets down below 4, okay, I'm not touching it. I'm still wanting to see. The last thing I'm really planning ahead for is the entry. Does that make sense? Okay. So I guess as a basic rule of thumb, if you're going to pick a market and you want to prep it up and plan ahead, and always planning ahead, I think it's always a good thing to do. Know what you want to see. You know, if you're right, this is what I should see. If I'm wrong, this is what I don't want to see. And where you're going to get in and out. You've always got to have an exit plan for anything, any trade. I'm a great believer. And whether it, I mean, stocks is one thing where you can probably get away with it sometimes. You can say I'm just trying to say, since say you bought it somewhere in here, say through here. Okay, you see this, it's had a sharp sell off, it's popped back up, it's built a high low just in here, and then it's popped up. You bought on a little breakthrough here, you think it's going to keep going. What's my exit plan? Or if it breaks back down through there, I don't know what's going to happen. I'll just get out and reassess, and it's pushed all the way back down. You've got a better entry. Rather than just buying and holding, sometimes with stock you can get away with that, I guess, buying and holding, because a lot of the times they head south because you bought it outright. You paid, you sort of paid up front. There's no margin involved. It's not a derivative. You can do that. You can get away with it. You just how much time is it going to take, and this is what my key aspect is, and what I like to look at. Or just sit there and tie your money up. Potentially tie your money up and do nothing. You know, it could be a month, it could be a week, it could be a year. You don't know. If you got potentially this, you bought it in here. This is the end of September. You know, 3 or 4 months you sat there doing nothing, right? One day it could pop back up and you'll be back in front in one session if it comes out with really good news. But you're tying, in essence, you're tying your money up. And so that's where looking for the entry and getting the probability on your side, um, and even exiting. And there's nothing to say it has to come off the radar if you get it wrong. If you jump in, it doesn't go your favor. Like here, you've exited when it broke down through here, or even that push down, you've got out in a pop back up here. You know, you took a loss, so be it. That's trading. Then it's pulled back, and maybe you're looking potentially to have another go through here. Buy it on a breakthrough 475. You know your risk, and then if it does keep going, great. If it doesn't, you might just have to reassess. So there's always that juggling between getting it right and getting it wrong, I guess, like anything. But as long as you know your risk, where's it heading with that? So with, I guess, with futures and all the FX and things like that, you can get hammered if you don't know. And any sort of derivative product, if you're using margin, I think it's always good to have an out. You know, have an out where you're going to head if you're wrong. What are you seeing? I don't like that. I'm getting out. Like I said, it's just good capital management too. Well, that's my view anyway. I like to make use of my money. If I got it wrong, I'll go move on to something else. In the meantime, I could have had a couple of trades here, done all right, you know, made whatever I lost there, made it all back plus a bit more, and then the setup occurs and I jump back in rather than just sit there tying up your capital in that for too long. All right, probably if that all makes sense to people, and we just you can understand where I'm coming from with when we're talking about, you know, the first part is picking. If you picked your market and what you like, you know, fundamentally it could be this um, MVP. All right. I like that. I've done my research, I've done my fundamentals. What's the next stage? Is just trying to look at what's happening, trying to look on a macro level. Okay, this is happening. I understand the story too. Okay, that looks good too. That's maybe your second step. Your third step for me is my technicals. Jump in and prep the market. What am I seeing? Where's my anchors to a chart? What's happening? Is it trending higher? Is it contracting lower? Is the overall trend broken higher and it's just starting to capitulate? What's happening in that market? Okay, and once you can put together a bit of a picture, you can draw it up. I know what I'm drawing up here. My last thing really, once I've got a bias, and I really just putting together my entry techniques and just jumping in and just marking up what I want to see in a market. And that's, you might just do that. You might just mark up what you want to see on this chart. Say it's that type of technique, and just put it aside. You can just save that, save it on your hard drive, save it as a chart, take a screen snapshot, and just sit on it and just see what happens. And if it doesn't play out, so be it. Move to the next one. If it does play out, or if it changes, then you've got to reassess. All right. So I hope that's helped, guys. You know, I babble on a bit, but it's something I like chatting about. I think it's really important. Prepping the market's really important, and using different time frames too, and knowing, always remembering, don't try to jump and chop and change between time frames. Have a bit of a system to it. Like I said, I like the starting on the bigger time frames and just working my way down, picking it out, and then getting to my anchor chart, mark up my anchor chart of where I expect some really good action to happen. Don't get caught in the middle, when the market's heading south and you jump in the middle off a minor time frame and entry. That's a perfect entry, but in context of what's happening for your anchor chart, not a good entry. All right, so just putting that plan ahead. It's just putting that in place and taking note of it, seeing what's happening, then go from there. All right, I hope that helps, guys. Look, we haven't touched on any stocks at the moment. Is there anything quickly? I know. See any sort of that form that's very solid. Let's just have a look at that. Yeah, this is CBA. It's actually probably, let's draw that up. I like this chart. I'm liking them. But I know this is, all right. Let's just prep this up. Okay, CBA. What would be a reason for buying it? For me, okay, I think interest rate drops sort of off the card in Australia maybe, and my macro, yeah, not so much the CBA itself, but my macro view is that they can't really cut rates anymore, and I think now we're starting to potentially look towards factoring in rate rises. Is that going to help CBA? You'd expect so. You'd expect that they're going to get more bang for the buck on the mortgages as rates rise. The interest they're charging. So my macro, that's probably going to be good for CBA, right? So I put together that in my head. I know so what would I be biased? I want to be buying it. Yeah. So let's jump down to our technicals. What are we seeing here? All right, it's pretty clear. Like Paul said, actually damn clear that 70's been targeted quite a few times. You can see that pressing down. You've got a lower high, another lower high, some more lower highs. All right, and that's just become a key level actually. That's all pressing down. It's been bought up at 70. It probably has popped through a couple of times, but there's a rough area that's bought up. My MAs, this is a weekly chart. My MAs are heading south, right? So they're starting to roll up. Okay, on a weekly basis, that's looking good. Is it a bit too early on a weekly basis? Yeah, maybe I'd like to see what I would like to see from here. We've had that move off support. We've had that move off support, which is this little leg up here. We've got a resistance level just broken, which is just through here. Just draw that. All right. So we've got this type of price action. What do I want to see from here? I'm starting to see this as a bit stretched on a weekly basis, maybe. Okay, if it's a bit stretched, what do I want to do? I don't necessarily want to buy it. I would be waiting for a pullback. So I'd probably be looking for this type of price action, right, before I can buy it. I mean, like we said many times, you can always be wrong, and you could be sitting there holding someone's hand, um, just waiting for that market to pop up. To pull back, and it just doesn't. It could just go on strong. And it could stay overbought. Like we said, it could stay extended for a while and just get even more extended. All right, does that make sense? So, but I've planned ahead what I want to see. Maybe we might see it continue on, and then this little type of contraction at highs, and then maybe okay, that's my entry rather than a deep correction back below. Well, this resistance zone back below, it holds above. If we can just extend that, so it just goes straight up, holds highs, and then okay, we probably seen that that's really strong. Everyone's jumping in. Let's get involved. We know where our risk is going to be down here. All right, so we've assessed that, we've planned ahead, and then if this market, if it's popped up here, we want to see a pullback, and this is why I like to wait for shoulders. If it's doing this type of price action, we go, okay, we expect this, and then to buy on that break higher, we got our risk, and all of a sudden you're seeing something like this, you go, oh geez, didn't expect that. Okay, I'm wrong here, and I haven't jumped in. So I'm waiting for my setup. It didn't occur, and we might just get this bang, and down we go, for whatever reason. All right, so we're prepping it all up, and basically we've got our three scenarios maybe drawn out here. We planned ahead, and just sitting back and wait. You might save this chart, put it on your desktop, and then every now and then refer to it. You can alert up CBA, and just keep an eye on it. I mean, you've got heaps of time. This is a weekly chart, don't forget, and then we just go from there. Does that make sense on that one there? So we've got our market, we've got our reason for buying it, we've got our bias. Bias looks to be up. Just click down to a daily. You can see that there, that the MAs are coming off. It's been contracting through there, holding the lows. It hasn't really, for me, on a daily basis, built that high low. It's just pumped up through that 79 zone. I'm expecting a pullback, even on daily, because it's getting a bit overcooked up here, a bit stretched, in conjunction to what's happening on the ASX, maybe what's happening in the US, all getting a bit stretched. This could roll over, could build that high low, and then we want to jump in. And then I go back to what I've just prepped out and what I planned out. All right. Is there anything quickly before we finish up you just want to put up there? Any stock? Market's down 60, not looking good. Let's just go back to our CFD chart there. ASX. Yeah, so that's continuing. Actually, continue today. We expected maybe that to hold up. So that's definitely a lower high now. We're prepping that up. That market's starting to roll over. It's taken out the highs. This is contracted. A strong market that should have held up. Should have held up above 55.40 and made that higher low and then gone again. It didn't. It's contracting at the moment. So just something to keep an eye on what's happening. All right. Okay, guys, we'll finish it up there. If there's no more questions, I hope that helped. Sometimes I dart off in different directions, but I really hope it helped. Like I said, if you've got any questions, feel free to whack it through to support at, feel free to put it through to support. Just chuck it on an email at tradesetup.com.au and we'll try our best to give you a good answer. And if we've got time, if you put a phone number on there, if we've got a bit of time, we'll give you a call. Always happy to have a bit of a chat, a bit of a chatterbox. So, yeah, hope it helped. If there's something you're not understanding, some sort of process that we're going through, this is what we like to do. Like I said, if you break it down, once we've got our entry off here, we're trying to take advantage of a back to CBA. What I'm looking for a leg, the start of a leg higher, and I want to see potentially another leg like that. All right, so I'm trying to get in early and then see if I can hold it and make use of the higher lows. Something like that. This has sort of been building higher lows. When that starts to fail, to take advantage of that, and at least you can take a partial exit. We're trying to get as much of that leg, that potential leg higher, if that's going to be the case. We're trying to take out as much as possible. So using those lower time frames just to tighten it up. And like you could be using down at a daily. I'm sorry, not so much on the stocks, but you could go down to an hourly chart because technically they should still hold on an hourly chart. You might see it start rolling over, and then just try to lock in as much as you can. Sometimes it works. I mean, generally, if there's a strong market, it'll work really nice. If it's a weak market, you might get chopped out. You might see it pop up high, and then you're just pulling your hair out, and then it could roll over after that. Who knows? I mean, that's just the way it is. That's trading, I guess. But I hope all this has helped, guys. Thanks very much for joining. Like I said, any questions, send it through to the email address, support@tradesetup.com.au. We'll be back tomorrow. What's that, Friday? And we'll see what happens in the US tonight. So we get a bit more continued down move, or we just snap back and make new highs again. See how the market takes it, see if it's going to be a bit more of a Trump rally. All right. Cheers, guys. We'll speak to you tomorrow.